Good afternoon and welcome to the Greenleaf Financial Fitness Series, 20 minutes to a healthier, wealthier you. Today we're going to be doing Tales from the Crypto, where we'll break down Bitcoin and cryptocurrency and try to help explain that. As always, we like to do a little introduction to our team. So you'll see in a second, Jamie Greenleaf, there she is, partner and advisor with Trafaro Greenleaf. Here with me today, as usual, is Jim Hiles. Jim is the managing partner with First Capital Advisors Group. And yours truly, I am Jim D. I'm a financial advisor with Greenleaf Financial. So we thought it would be a good idea to start at the very top with, when we're talking about cryptocurrency, to kind of just define what is currency, right? And look at the evolution of money. It seems kind of silly, but when you really think about it, what we think of as money has not been around for that long as it is today. You go back to the days of barter, where you have a picture of a cow there. You know, you had a guy that had a cow and a guy that had a chicken, and they wanted one guy wanted eggs, one guy wanted milk, and that's how it was done. It evolved into, you get into gold. Obviously, that's a long history of being a currency in the world. Gold is heavy, so they came next with metal coins. We have a typo there, 1L. But after metal coins, paper money, which is what we're most used to calling currency, and that includes checks as well as just cash. Then we got into plastic cards, where we used plastic cards, credit cards, to transact between individuals and businesses, or any kind of transaction that you do on the internet now probably involves that in some way, which evolved us into electronic money, which we all know, Venmo and PayPal and Zelle. If you use your online banking, it's basically just electronic. Half the time you're not even touching any currency from the time you get paid to the time it goes back out to pay your bills. And that brings us to cryptocurrency. So really, currency is a medium of exchange for goods and services at its core. Just taking a look at some of the facts about currency, obviously, top of the list is it's a form of payment. It's usually issued by a government. Value of any currency is in constant fluctuation in relation to other currencies around the world. And the currency exchange is a market that exists as a means of either profit or to hedge from those fluctuations.
So let's talk about what currencies in the past have done. And that little stack over there, those are Deutschmarks back in Germany in the 30s. And it just is a set of stacks of essentially dollar bills called German marks at the time. And it just goes to show you that the value of paper money, or even the value of any money, can change in what its value really is or really means. And when you talk about currencies and you're dealing with the countries looking historically through time, obviously we're trying to do trade. We're trying to trade with one another, not just next door neighbors, across the state, across the country, but with other countries. So you need some way of, for those who've been around for a while, it still happens, I guess, when you go to Europe, you're going to go transact your money in euros, not in dollars. Or if you're going to the pound, and if you're going to England. So now you have to do all these conversions, and it gets kind of cumbersome. And generally, there's a bank involved, and sometimes there's a fee involved, and you have to worry about all that kind of stuff. And, I always come home with like a pocket full of change, and I never know what to do with it. I throw it in a drawer. And one of the things about currencies, it's kind of the value of the currency is also reflective of what's going on with the country or the issuing government. And this is a problem. And you go back to my little picture over there. If people believed in the 30s that the Deutschmark was essentially worthless and it cost millions of Deutschmarks to buy a loaf of bread, that had large enough to do with the state of the German government, the ability for that particular government to back up its paper money, and they would just print it and print it and print it. They'd have nothing backing it up. So there's no confidence in the value of the currency. So, and political changes come and go, and politics come and go, and currency values also come and go. And then there's the banking system, which we're all dealing with today in one way, shape, or form. And I tell this to people who don't understand banking. You do realize that all the money is circulation out there. There's nothing really backing it up, right? It's just sort of
Right. Not since we have been taken off the gold standard, which supposedly backed our dollars. But now, as we've seen recently, right?
Yeah.
They're pulling them out of thin air.
And if you ever looked at the fractionalized banking system that we have, it's an interesting way of getting money out in the system quickly, not really being backed by much at all.
So speaking of the banking system, we'll be going more in depth on that in a couple months. We're doing one of these webinars on the Federal Reserve. So that'll be another education.
Electronic payments. I mean, this is, I don't know if you can remember, I remember getting my first credit card because out of college, because it was like a big deal, right? And then I think I got 6 of them because I needed them.
Because they were fun.
I needed to spend money.
Right.
And so I was doing this electronic payment. Little did I know, I had to actually pay somebody back. But essentially, that's these debit cards that have come the last 50 years or 60 years now into debt. And debt's gone a long way to help the standard of living all across the globe, but it is an electronic payment system. The other thing you get with currencies is just, what do you do with this stuff? You got to carry it around. Right now I've got my iPhone. I got one of those little credit card holders in the back. Don't ever lose your iPhone. It's not good.
Lose all at once.
Which I've done everything all at once with my credit cards and ID. So anyway, the other part of currencies is when you're transacting, you're making investments. You can actually invest in currencies. So some of you may already know this, but the value of the dollar versus the value of the euro or the yen or the pound, and there's it's actually the largest traded market in the world is currency exchange trading among the different banks and governments all over the place. So currency is all over the world in terms of us being able to conduct business, conduct lives, and we need to know a little bit more about it. Now we're going to go look really into what we think is going to be the next phase of currencies. And a lot of it has to do with the fact that this is a fantastic chart because
incredible.
2004, this just goes to show you the tech company growth, the tech influence in our society. 15 years ago, GE was the largest company. Exxon was number 2, Microsoft number 3, Pfizer, Citi, Walmart, BP, oil and gas, AIG Insurance, Intel, a tech, another bank. Look at the difference today, and look at the size difference. There are 2 things going on there. 7 of the 10 largest companies out there are tech companies. I mean, I would have never thought GE or Exxon would be, they're actually almost not even on this chart.
Right.
And it's amazing to see the differences. And this is just another implication of how technology is becoming, everything to all of what we do. And when you go back to what Jim said earlier about, how do you transact in this stuff? Well, it's kind of like analog. I don't know if you remember analog, but we used to be on analog, right? And you want to go ahead and make the sound that you used to make when you connected to the internet? Remember that sound?
Oh, that screeching, howling sound, right? Right.
So this is a little different, but again, it's all money. It's the same thing. So we're going into digital money, and there's a lot of technologies that have already switched digital. So now money's sort of catching up, and electronic assets are just essentially a representation of physical assets in analog form. So technology's made it faster, cheaper, more powerful to transact.
So if we look at digital accounting and contracts, take a look at all of the financial assets out there, whether they're stocks, bonds, foreign currencies, life insurance, and then we look at smart contracts and how business is done. There's 2 parties here. There's a smart contract, and between those parties.
Before you get into that, though, you got to account for all this stuff.
Right. So triple entry accounting was the big finish.
Right.
That's the
That's the big finish. In the beginning, it started with I would keep a record, you would keep a record.
2 people keeping records only. That's the old analog, but even really the recent past in digital.
So now you have what's called triple entry accounting, which is this thing called the public book. That's digital accounting terms. And you also have these other digital things going on. This thing called a smart contract, which basically says 2 parties agree to a certain agreement, whatever it is. There's a smart contract that is electronic that serves as execution, and all of that leaves a trail. And if that trail is out there in the public marketplace, then the public book essentially can verify Alice's book and Bob's book. So you have this triple entry type of accounting, which is very, very difficult to put the books up, because you not only have one other person looking at it, you now have the public looking at it.
Which is right, the smart contract. So triple entry accounting is basically the blockchain. A blockchain is simply a triple entry accounting system that automatically keeps track of all the transactions that occur in a network. It adds a 3rd ledger instead of the former 2, and it's maintained by the entire network. So it solves the double spend problem, the counterfeit problem through a consensus mechanism. And that triple entry accounting system prevents a sender from duplicating a digital asset, which is a computer file, before sending them to the receiver. So it's using a triple entry accounting system. Every network participant can be confident that the digital asset being sent to them is the original asset. And finally, triple entry accounting unlocked the ability for financial assets, for assets of value like financial assets, stocks, bonds, currencies, commodities, to become truly digital and not necessarily, and can remove them on from the analog world.
Now that's a lot of tech speak going on there, Jim. So I know you're a tech guy.
Sure. Yeah.
So
I don't like to brag.
No, I know. So for those of you who want to say, what's the blockchain? This is essentially the blockchain. The blockchain is here to stay, and I think it's going to be one of the things we all will pay more attention to, because it is this next level of technology and accounting sort of stuck together. So what's digital currency? Now we finally beat this horse. It's electronic money that's created by technology. It controls the creation and protecting transactions while protecting the identities of its users. That's what digital currency is.
Just a quick listing of the top 10 cryptocurrencies. When you say cryptocurrency, most people think Bitcoin. For good reason. It was the first. It's the largest. It's the market share is 128 billion. You look at the next one, it's only 19 billion. Ethereum. And then there are others beyond that. So when we talk in cryptocurrency terms of what we're doing today, it's not all relative to just Bitcoin. There are others out there. We're talking about the main concepts now.
I guess one other thing to point out, just those numbers are significant numbers. I mean, these are big dollar amounts. This is actually happening now. And the reason we thought it was important to put this up here is to understand that the technology that makes this all work, they're all using blockchain technology, which is the shared distributed ledger database. And that ledger database is essentially able to be run and looked at by essentially anybody who wants to look at a transaction. So now, instead of one company, one bank handling all your money, and hopefully you do a good job and account for it, you really have this, they call it, again, the blockchain is a distributed ledger. So you have this verification process go on, which makes smart contracts work, which essentially are computer codes that help make sure that the contracts are verified and enforceable. You can't erase it. You can't, the transactions are done anonymously. So you don't have to go through a central party or some sort of mechanism on there. You can see this 2018 Senate report says that smart contracts are essentially valid. They are rooted in basic contract law. So this is here, and these smart contracts are here to stay.
And the enforcement is built right into the code, which eliminates the need for the third party.
Right.
So just some facts about Bitcoin. As we were saying, it's the biggest, it's the first, so it's the most famous as we sit today. There will only ever be 21 million Bitcoins. That's built into the code. So
let me make sure I'm going to highlight that, because Bitcoin then has made itself an asset you can't just go out and print more of. And one of the big issues with paper money, they call it fiat money, because they could, back in the day of fiat, you would just print money and make it work in the economy. So if you have a limited and restricted number, you can more easily keep the value stable in terms of what the underlying value of the currency could be. And as it says here, they've already got 18 million out there. There are only 3 million left to be distributed. They call it mining, to be distributed. So scarcity is good for the price. If you only have so much, it's better for the price. It's easier to calculate the price, and there's no government out there trying to manipulate on the side. And it makes it easier to liquidate. Bitcoin, we're not recommending Bitcoin or one over the other, but Bitcoin is out there. We're seeing it not only out there on exchanges on the internet, we're actually seeing it being done so people can buy things on the internet and actually go into a store and use Bitcoin to buy things. So it's getting wider acceptance, it's getting easier to use. Bitcoin is the biggest at 40% of the market, but I think there may be some other ones coming up.
Some of the risks. The value, if you follow any headlines on this at all, the value can fluctuate quite a bit. It does. It's getting a little less volatile in more recent days, but it still is. It's going to continue to fluctuate, as do most currencies. It could be replaced by a better, newer, More advanced cryptocurrency, that's a risk to owning Bitcoin. And the other, one of the big ones is if you lose it, it cannot be recovered. It's in your computer.
You have unique code.
Your login.
Right.
Tell them about it.
Right. So you have a unique code. Everyone has a unique code. So if you lose your key, essentially, you're going to lose your Bitcoin. It's just gone. You can't go back and get it, because the whole idea of protecting people's identities and privacy is that no one else can be able to tap into that code. So don't lose it. And there's situations out there, you can probably Google them up, where somebody lost or the guy died. Actually, it wasn't a state situation. The guy died and no one knew what the Bitcoin number was.
Right.
Ended up being a fair amount of money. So what determines the value? It's essentially supply and demand. But I want to make sure we all understand, we look at this chart and understand, this is Bitcoin price, the price of Bitcoin. So we're talking two things here. We're talking currency, which is basically the medium of exchange, right? So if I've got $1 and Jim sees that dollar, recognizes it for $1 of a good or services on the other side, that's a fair trade. We'll make that exchange. The dollar can fluctuate. The US dollar does fluctuate. You've got fluctuations in currencies that aren't just limited to Bitcoin. So in Bitcoin, the whole game of Bitcoin was people were actually investing in Bitcoin because they wanted this fluctuation. They wanted to be the first one in to own Bitcoin because there are only so many of them, it'd be a lower price, and they'd have it go up and they'd sell it. They wouldn't care what else it did.
Right, that was more of a speculation investment.
Right, so what we're really talking about, Bitcoin will probably settle down in price. It will eventually. When more people get into it, this high volatility will probably go down because there is limited supply and demand will probably be higher. So therefore the value could increase, but not at these kinds of rates.
Right.
But keep in mind what digital currency is really designed to do. It's designed to ease a transaction from one to another. So typically we don't buy Bitcoin to have it go up and down per se. We think the application of cryptocurrency is going to be the application of doing business. If I want to buy something in the Philippines, and I'm in US dollars and they're in whatever they're in, I don't know, something, and I want to buy that, right now, I have to go through the internet, I have to go across internet transactions, I have to go through some secure, I have to get my credit card, hopefully then get it to me and so on. And it takes time. And if I'm doing small dollar amounts, things like that, then the fees might get expensive. So here, using a cryptocurrency, I can actually make a transaction, literally convert my dollars in a split second, shoot across the internet, and they convert it back to whatever their currency is on the local level in a split second later. There's really no fluctuation risk in that transaction, which is what most people think about. It's like, oh, what if my Bitcoin goes down in value? It's like, well, it doesn't really matter because technology is making transaction work so fast that the value of the Bitcoin is probably less of an issue than it used to be. And you're seeing things called stable coins, which are basically tied to things like the US dollar, or they're just meant to be stable rather than fluctuating.
So kind of what you're saying is that it's really more intended to be a globally accepted form of currency, as opposed to an investment for speculation and the price increase.
Agreed. And I think there's probably two games you can play there, right?
Sure. Right.
You could say, hey, Jim, what can I invest my money in? If is Bitcoin a good thing to invest in? I'd probably say, sure, I think it is, because it is the early stages. We don't know where Bitcoin's going to go in terms of value. It's a speculation.
It's a speculation.
But if more demand comes in and there's limited supply, that's just, potentially an opportunity in the currency.
So this is here to stay. Investors are increasingly involved in cryptocurrencies. You can see here, 82% of the Fortune 100 have explored the blockchain, and 22%, as a matter of fact, I saw an article just this morning that said 1/3 of institutional investors already own digital assets. So that's how fast it's moving. Our slide is out of date. We made it yesterday.
Exactly. So how can you own it? You can own it in a number of different ways. I use something called Coinbase. If you go to GoPlan 101, you can find under Ready to Invest Coinbase, which is an exchange. You can buy whatever coin you want there. And there are a number of other ones you can go to. They're essentially online websites to allow you to exchange your currency for whatever cryptocurrency you want. So in summary, cryptocurrency, this is currency created by and generated by computers. It is decentralized, meaning there's not one particular party in control of supply, demand, and issuance of currency. No one can control it. It is private in that regard too. It is truly a digital medium of exchange, and it has a limited supply. So a cryptocurrency has a lot of positives that regular currencies don't have. And we think it's probably something that everyone should be at least aware of and get involved with. You may see it coming at should I say a theater near you, a digital theater?
Theaters are closed.
That's right.
Yeah.
Okay, so maybe next time. All right.
So if you have more questions, feel free to contact us. That's our phone number right there, 732-945-7472. Feel free to email me, that's my email address, and join us for the next webinar, which you'll be receiving an invitation to. That's Tuesday, July 14th, where we're going to be talking about addiction and finances and how those can wreak havoc on family finances. So we'll have some experts on about that.
All right, look forward to it. Happy summer.
Thanks, have a great day.